Check, check. Quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, check. We can hear you loud and clear, Coach Jay. Uh, How was your day today?
Hit the air horn button. That's how my day was. Hit those air horns. We got markets making all time high. Pretty good trading day overall. Welcome everyone to At the Buzzer. How was your coach? How was yours, Coach Paul? How was your
Good.
trading day?
I didn't trade much and did well. I find that a theme in my trading.
I got a quote from a pretty smart guy in my notebook over here that says "Trade less, make more," and that is a oftentimes exactly how it plays out. You take a couple of trades, trust trades, take trades that you trust, and let the market do the rest. And that was the case today. And we'll talk about it. A bunch of different trades here. Today was a good day overall. But let us know how you did in the chat. Welcome to At the Buzzer, our market recap. This is your first time here. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay, been a Topstep performance coach since June of 2023. And that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experiences, some knowledge, and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You are all our chat, our audience. Thank you as always for joining us each and every day that you do. We cannot do this show without you all, so we really do appreciate it. Let us know how you did in the chat. I saw Brad Sim says buy and walk away, profit, trade less, keep more. I was able to get a gold trade in while at work towards passing the combine. Sunkiss Yogi, nice job. 495 for me, FOMC, quick sell. Hit my daily loss limit with a lockout. Running stops too tight. Have my daily loss limit too tight too, so it's all good. There you go. So measured risk with that daily loss limit, right? If you want to give your trades a little bit more room, maybe opportunity to scale down a little bit, size down. A good job managing your risk on that downside. Dan Charger says positive day. Didn't let myself get greedy. Three swings, three misses for Rich. Hey, Rich, there's always another game as long as we have an account to trade the next day. But let's get into the news. We did have some numbers that came out this morning. Also, we are in the middle of earnings season right now. So Visa did just report their earnings. Looks like beat on revenue expectations, 10.7 billion. Estimate was 10.62. Our earnings per share came in at $2.98. Estimate was $2.97. You take a quick look at the Visa chart to see if that's anything that we might want to pull up if it's interesting over there. But we also did have some other numbers come out this morning. Case-Shiller Home Price Index came in at 1.6%. Prior was 1.8. We had a consumer confidence number as well coming at 94.6. Forecast was 93.75. Of course, everyone's waiting for the big number tomorrow. The Fed rate decision already kind of priced in that we are getting a 98% probability of a 25 basis point cut. So any type of surprise tomorrow could get these markets going crazy. But Coach Paul, like it's been all year, some of the unplanned news, planned depending on who you ask, is taking precedent over the planned news, and we sound like we're getting closer to a trade deal between the U.S. and China. Anything else you got on the news?
No big news. That and waiting for tomorrow's FOMC, which, like you said, I already think it's baked in the pie. But nothing outstanding. And we wait, and we wait for a random tweet also.
Yep. Absolutely.
But seeing that the president is in Asia, that tweet will probably come during the night session here in the U.S. So if you're trading tonight, beware of that.
Absolutely. We did see an AI, of course, is the buzzword right now. Throw AI on something and $1 billion behind it at minimum. But we did see OpenAI and Microsoft. OpenAI, I think, purchasing $250 billion worth of Azure servers from Microsoft, which is a huge investment in infrastructure for AI. Uh, and we have NVIDIA CEO Jensen saying that he thinks that there's going to be a deal between the US and China. So a bunch of stuff fundamentally that might be leading us higher, even though there are still some uncertainties out there. But hey, like Hogue says all the time, do not fade a directional market. Uh, Whatever the news is, the markets are going up. So let's take a look at the markets. 36 different markets we can trade with Topstep accounts. And today, to the downside, we had heating oil down 2.71%, micro Ethereum futures down 4.72%, and natural gas, our biggest percentage mover, to the downside, down 5.03%. To the upside, we had wheat futures up 0.81%, soybean futures up 0.87%, and soybean meal up 2.78% for our biggest percentage mover to the upside. It's actually kind of surprising. I did not expect that. But with I think we heard the other day, right? China's potentially going to be buying some US soybeans again if we do get this trade deal. So maybe a good look for our farmers here. All the ags are leading percentage movers to the upside today.
Except for the ones who gave up row crops and decided to go into livestock.
Right. Seeing some heavy selling, coming in there. In the cattle market, wasn't limit down today, but it's been hogs were down 1% today. We have seen some limit down days. To talk about our big four, we got crude oil down 2.2%. The S&P up 0.25%, making a new all-time high today. Gold down 1.25%, and the Nasdaq also making a new all-time high, up 0.78%, over 0.75% in the Nasdaq. Of course, all that tech news is going to lead the Nasdaq higher. Dow also made a new all-time high today. Shout out to the Dow. Traded above 48,000. When do we get our Dow 50K hats? Gotta reach out to Tuckman.
Yeah.
Got a question in the chat here. How much real money have you made this week? Good question. Today's what, Tuesday? I normally don't look, but I could take a look. I think I'm up about $2,500 today, this week, in 2 days. Try not to count day to day, but up about $2,500. Good question though. And actually, no, I think it's more than that. I honestly don't know. I know I made some winning trades. I know I made some winning trades. On combines, no. This was in a personal account. But good question. How much money did you make today? I think that's the more important question. That's what I'm here for. All right, let's take a look at the Nasdaq on a daily, Coach Paul. What are we seeing here on this daily chart?
Still running higher, up and away. There is nothing impeding this rally as we keep making new all-time highs. We'd have to see something dramatic. And even then, when we saw something dramatic, it came right back. So very bullish. The trend is your friend, and the trend has been ripping higher until further notice.
Yep, absolutely. Trend is continuing to rally. How much money do I have in my pockets right now? So I took my wallet out of my pocket, but let me see. Let's just go full transparency. Let's see how much money I have in my wallet right now. Want to go full transparency? I got a $20 bill. $20 bill in my wallet. Do we want to just keep pocket watching? I got some $5 bills here in my desk also. Dakota left these here, and they actually say, you can see this, it says process over profits. When Dakota was here the last time, he left these here. So the plan is at some point when we have a trader meetup or something, I'm going to give these $5 bills away. But there you go. I have about $45 sitting in front of me here. And you just created that YouTube page 4 days ago. That boy not good, just trying to make us, whatever your name is. So we're just going to go ahead and hide you from the channel now. We appreciate you being here. But every time I do anything, I try to think about the people who either look up to me or I try to make proud. And I could never imagine that being a troll in a YouTube chat is what they say they're going to be proud of. So maybe make better decisions. But all right, let's let's get to the shorter time frame chart in the Nasdaq here, Coach Paul. 30-minute chart on the Nasdaq. What are we looking at?
Well, we had balance last night, as could be expected after that run up. We're holding that 50 moving average. And as soon as New York opened, we did what we're supposed to do. We had buying. I hate to say this, but it was really kind of painless to buy.
Yeah.
But in runaway markets, that's what happens. Or I got into trouble, and I've said this many times, is trying to fade these runaway markets based on price. But yeah, great. That goes in the dictionary under a non-random move into new highs. But let's do that again. The volume
Point of control.
profile
Yeah.
from last
Volume profile
night
from
and
last night.
see, yeah, see if it gave us any information for this
So
morning's open.
here we go with the volume profile from last night. We got a point of control up here. Actually, let me make sure this is right. Yeah, there we go. Okay, so you got your volume point of control, 2620s about. Sorry, volume value area high, 2620s, volume point of control from the overnight session, 25,970s. We have a full session VWAP here, that pink line there, and then we got New York session. And Coach Paul, I have to say that this is one of my favorite ways to start looking at these markets now, especially coming into the New York session. Here we go. What are
Yeah.
we looking at here?
So using that volume point of control, or the volume, what happened? We got bought lower. How can we tell? Volume point of control was at the bottom of the value area, and it was held. Then it got above VWAP, coming into today's open. Now that's background. Do I just blindly buy it? Well, I could, depending how much I'm willing to risk. But the key point is the information we got. We're in a bull market. Where can where can I buy it? On the opening, it was a little tough, but looking for failed selling, and we found that later in the day. But let's look at that volume point of control last night.
25,970. Kind of stayed down there.
All right. So let's move it to the opening and go through the first half an hour.
It started off higher. We'll change it to a developing point. Started off higher. But by the time we got to the New York session, traded lower, but then found balance.
Right. And then look how flat it got.
Right.
And it really didn't change. Now, we know that with that, we have information that in Europe, it was bought up.
Mm-hmm.
So coming into the open, if I'm going with the flow, I'm looking for a place to buy it.
Right.
Right now, we can go to our traditional frame out the opening range.
You have that opening range framed out, and volume for the New York session never left the range to the downside. Price did, but volume never did. Price is that advertising tool that we talked about earlier. Price is going to show whatever it wants to, but is this indicative of shorts coming into this market or selling off this market? We had that major 26,000 level. And what I thought was really interesting is before the open, 8 a.m., we had a number that came out, that Case-Shiller number. that kind of set the low, right? Where we frame out these news candles and we see how the markets respond to it. That set the low, pushing us above 26,000 and holding above 26,000. We came back, tested this area a couple of times, but really no selling into that area. Yeah, this was just find a spot to buy it type of market.
Now, yeah, to me, the breakout was closing above that opening range.
Yeah.
And when we closed above it, all the sellers, we're at all-time highs now.
Hmm.
That's where it's unleashed to me. Look at the size of the buying on that with breakout.
Yeah, and this candle right here, I was actually on air with Dawn and Dolby when this candle printed, and this candle here, like Coach Paul just said, cleared the all-time high. A ton of buying volume coming in, and also you got to think about we don't trade news, but fundamentally, what happened here? This was the hey, the U.S. and China are coming to a deal, or potentially adjusting their tariff rates, right? So from that point, that could be the open of the day, the open of your trading day. From that point, we never traded lower. Volume, there's a ton of volume in this, so it's kind of hard to have it leave this range. But at that point, even if you were trying to fade it where you thought today had the potential to be a range bound day because we have the Fed, at this point, you kind of don't have to do anything. But it's hard to be short after a headline like that comes out.
Yeah, and that headline was confirmed by the volume.
Correct.
That's so. The way I look at it, I look at the close, not just the price. It closed above on good volume. It's worth the risk of it's not going to go to the other side of the opening range. That's where I would put my stop or 2 ATRs, whatever you're comfortable with. But with that, that's big buying at all-time highs. Those are strong hands.
Very strong. Strong hands or weak hands, right? Because we know it all the time that somebody could be shorting this. At some point, if it keeps going up and you're short, you got to get out. And that could expedite this move to the upside, right? Where a headline like that comes out and, real aggressive, we spike up. And that candle was kind of crazy, right? Was it about 100 points, 70 points, 70-point candle in 3 minutes. It was probably closer to a minute, maybe 30 seconds. But this push to the downside, rejecting right inside of that opening range for shorts, failed selling. Failed sellers turn into great buyers and continue to push us higher. 26,231.5 is the new all-time high in the Nasdaq. And man, where do we stop?
No. Well,
or maybe we
don't
stop.
know.
Maybe we never stop.
We'll know after we get there.
Absolutely.
I stopped trying to predict highs. I got, like I said, when in the early 2000s, I got to sell the high many times. I got really good at it. The only problem was it kept on making newer highs. But with that said, we don't know. But this, in our process, this is market-generated information. What do I mean by that? Well, into new highs, we had very large volume of buyers. Who's in control? It's market generated. Is it risk-free? Absolutely not. If someone tells you have a risk-free trade, walk away. But it's a high probability of continuation. How much can I afford? Put it on, and as someone said, walk away. When you're comfortable and you predetermine the risk, sitting there watching it is going to be counterproductive. Every time it trades back down, it's like, oh God, is it going to continue? It's anxiety.
Right. Yeah.
If that, by the way, that's the way I see it from my experience. I used to be afraid to buy that. I was a natural, I'm going to fade that. Okay, let's say you fade it. How much is it going to cost you? New highs. All right. if that's part of your trading plan and it works over time, I'm not okay. But to me, I don't like to fade that kind of size of buying unless it closes lower than that candle. And it went and tested it.
Yep.
So nice trade there.
Absolutely. Jordan Main Golf says, unpopular opinion, but all I ask is that you remember that I said this. I think we see 1,000-point red day in the Nasdaq tomorrow. Anything is possible. Anything is possible. My question is, if we do see 1,000-point red day, Jordan, and you're right, how do you execute a trade to take advantage of it? Because if you really see 1,000-point move, make some money on it. Make some money on it. All right. And why? Yeah, who knows? Who knows? Heather says, can you talk maybe about some of the, I won't call them stupid people, with the short bias because it's going up so fast, maybe some PTSD from those 1,000-point drops last year. You know, I've been there before, and there are still some times where I'm just like, you know what? I want to short this. I want to short this. I think just naturally people are contrarians and want to have control over a situation. Honestly, when you're in a market that's continuing to grind up like this, you kind of have to let go of control, Coach Paul, and just let the market decide. And could feel uncomfortable because as traders, we think we're super independent and we're in control of our destinies. We can, make decisions at every moment, but it's hard to just say, okay, I'm going to surrender to whatever the market wants to do, and if it's going up, I'm going to buy it and just let it go. Again, that's a hard thing to do. So it's the natural contrarian. Maybe you've made a bunch of money to the short side in your trading career, so you always think the next one is coming, or maybe you maybe the biggest trade you've ever taken was a short. So now somewhere in your subconscious, you're looking for that next one. And it's going to happen, but how many times do you get chopped up before it does? Or how many times do you give back profits before it does? And I've kind of been that way as well. I definitely read markets better to the short side than the long side. But I have to remember that if I'm trading the equity markets, they just go up. So on a higher time frame. So yeah.
Well, here, if it's down 1,000, and it could, I don't know, could be up 1,000.
Mm-hmm.
That's prediction. Now,
Yep.
what you would see is some kind of structure tomorrow. So when you see that structure, go ahead, get it on. But without the structure, you're going to be tempted, or this is what happens in trading. I want it to happen. What I want to happen and what the market does are two different things. That's the one thing you need to learn as a trader. Plus, then when you have a prediction, you get anchored to that. Guilty. I've been guilty of that. So the market, by the way, is never wrong and really is never right. It's neutral. It's the result of buying and selling. Get on the flow. I will tell you this: if it's down 1,000, you're going to see some structure.
Oh yeah.
To get on it. Just
100%.
be prepared. Trade in the present.
100%. All right. Anything else you got on the equities, Coach?
You know what? Cousin Rusty was struggling today.
Yes, it was.
It's risk on. It's the complete opposite.
Taking a look at the daily in the Russell. What are you seeing here on the daily, Coach Paul?
Just not participating in the rally. It's being used. This is when the term is a risk on trade. The risk on means what's the riskiest equity index? Nasdaq. Spread it against the weakest.
Yep.
Because the risk is on in the Nasdaq, and we've seen this where it was strong for 2 weeks ago, and the Nasdaq was weak. That's spreading. There's a natural spread there,
Mhm.
and I think this got overwhelmed. If we go to the half hour,
That white line there.
it's it's the poor cousin, didn't it? And I think you can almost just see it. Didn't participate. I think when I was a spreader, you lean on this to buy the other. And look at the low though. What's that white line?
The 200 moving average on the 30-minute chart, 25.10s right now. 25.10.40.
Yeah, and we bounced off of it, so it's still holding some value. There was a good trade off of that. Uh-oh. We can't talk about it anymore.
Yeah, real quick. I'll bring it right back up. Give me 1 second. I was just bringing up another chart. But here we go. You
So
should see it now.
now there's a tale of a different market.
Mhm.
Actually, that had urgency last night. If I'm reading that, yeah, yep. From last night, they had urgency. It was sold early.
Yep.
So this is what I'm talking. Look at that. It had urgency and never recovered. We went back and tested that, didn't recover it, and finished near the lows of the day.
Mhm.
When we contrast that to the Nasdaq, and it was like flip that.
Yeah, exact opposite. The exact opposite trade. The exact opposite trade. So, and I saw a decent question actually. Since you said this was a trend day in the Nasdaq, did you just get into it? And for me, I didn't. And I said it during the opening call this morning. I expected this day to be a trend day. So my one trade in the Nasdaq that I took aligned with the bias that I had for it being a trend day. Only trade I took in the Nasdaq today was a short towards the end of the day. But if you look at the Russell and the Dow, we'll take a look at the Dow. If you were looking for something to short, you might have to go find it, right? And we talked about this before. There are 4 different equity markets. So, if you are that contrarian and you're looking for something to sell, it's been the Russell over the past 2 days. And I actually saw some traders in the chat saying that they took shorts in the Russell. You might just have that itch to short something. But if it's the thing that's continuing to rally and make all-time highs, you might have a hard time. Do you define yourself as I'm a Nasdaq trader and you're only going to take all your opportunities in the Nasdaq, or do you scan and find an opportunity? We talk about this all the time, Coach Paul. Do you scan and find an opportunity to trade a market that's giving you what you're looking for? Do I suggest trading all 36 markets that we have at Topstep? No, but if you default to one, you're kind of at the mercy of whatever that market wants to do for the day.
I have a quote here. It's funny we're there from my mentor Peter Stottlemyre.
Mm.
Taking a bullish or bearish stance is external.
Yeah.
Focus on whether a trade is right or wrong in relation to the direction in place. I brought some of my old notes back, and that really that's what helped me as a trader. In other words, I'm taking one side.
Yep.
So if I am with this information, I'm taking the sell side. Not because I had a bullish or bearish stance, but that's what was in place in the structure of that market. Now, I could have that structure if I was trading just Nasdaq. I have to trade that structure. My feeling is external, and believe me, someone asked her how Coach Paul, how did you stop going against it then? Because you said you did that years back. Exactly on that quote. I'll read it again. Taking a bullish or bearish stance is external. How did
Yep.
I say? Because I was just priced. I go, this market is so overvalued. Okay, that's a relative statement. That's my opinion.
Uh-huh.
And it just that's actually when I started working with Peter. That's how I stopped. I'm like, oh, that's what I mean by external. External is a projection. Um, i- Internal is market development. You get information. It's fragmented in the beginning, and as you get more time and more information, you can get a better read on the market. Then, when you get used to it and you build a trading plan, doesn't mean you're always going to be right, but you're going to get in the flow. You're going to learn how to get in the flow. That's what a good trader does. There were traders, older traders back in the pit who were very successful. Just go, what's here? I'll buy 50. And then, this is from experience and discipline. If it kept on going, he'd keep it, take some profit. If it went against him, he'd probably turn around, go the other way. That's when an experienced trader does. What the problem come, I mean, I can be really bullheaded and stubborn. Like this damn it, the market's wrong. I sell it again.
Right.
Who's been guilty of that?
Can't say I haven't done that a couple times. Couple times. More times than I would like to admit. But
So that's when when I learned. That's when I learned. Before I forced it. So I love this example. It's a tale of two different markets. They're both equities. They traded differently. If my projection was that they both have to go up, I might get hurt in one of them. But study the internals of the market. That's what we look at here when we review, and that's how we learn. I still don't have. I still don't have just blowout days every day. Don't get me wrong. But I can limit that and have a good idea of going with the flow. If you've ever swam against the tide, you either keep. I was a lifeguard when I was younger. You're taught if you get caught in a riptide,
yeah,
your first
don't fight against it.
initial response is to swim as hard as you can. And now you're fighting nature. Nature's never lost. I put that the markets have never lost. If you're fighting it, you'll end up drowning. The crazy part against the riptide is someone just said it. Don't fight it, Rich Layton. You must know.
Yep.
And then it will take you out naturally. So when you're fighting the flow in trading, you know what happens?
Takes you out.
Eventually, you just lose all your money.
Right. Hey, look at this in the chat. I'm grateful for this show. Taking another payout tonight. Third payout on this XFA. Road back to live. American Trader, love to hear that. Love to hear that. And that is just the dichotomy of the internet. Trolls, but this is why we continue to do this show. Love to hear that anything that we've said during this segment, for as long as we've been doing it, has helped anybody with their trading. And if it doesn't, go watch somebody else. But love to hear that you are just taking information. Coach Paul and I have both been coaches of traders and just in sports in general. Coach Paul, when your basketball players have success, the coach's thing to do is to not take any credit for it, right? I'm just providing information. Ultimately, it's up to the trader at the end of the day to take the information and and make it their own. So we really love to hear that. And great job. Keep going. Keep going.
Yeah, when you see that, you just smile.
Yep.
When you see whether it's a player or a trader,
Right.
and why? Because, like I said, I struggled for a long time.
Hmm.
I would have, by the way, I'd have these great years,
Yeah. Followed by.
but followed by terrible years because luck runs both ways.
Right.
You can get lucky, and then the problem is sometimes you don't know that you were lucky, and you keep doing, you created some bad habits. It comes back and gets you until you start learning. And by the way, this is a great place to learn.
Agreed.
You're here to learn. And once you learn, by the way, you're going to struggle. I don't, if someone tells you you're not going to struggle on this, they're not being honest with you.
Not at all.
It's, but as Ray Dalio says, then you start struggling well. So, great conversation, but this was a great example of two different markets, one in equity, both in equities.
Hmm.
Trade the internal information of the market and get in a flow.
100%. 100%. Let's take a look then at another market that is in a bit of a flow right now, and that is gold. A flow to the downside. Uh, Anybody remember what this pink line is? We put it on there yesterday. We put it on a couple of days ago, but then we added it back yesterday. Anybody remember what this is? Who got it in the chat? Let's see. See who remembers
Bueller,
what VWAP.
Bueller.
It is a VWAP, but VWAP from where? Why did we anchor it there? I'll zoom out a little bit, maybe give you a little bit of a hint.
Yeah. Well,
This was the VWAP from the breakout of the 130-day consolidation, right? We sat in this consolidation for 95 trading days, and then the candle that we broke out above that and made a new all-time high, that's VWAP from there. And we can see we've had a strong rally from there, and we pulled back to it today. We put this on the charts yesterday, Coach Paul, and we talked about we're under the 20-day moving average, heavy close under that 20-day moving average, and where might the market be looking to trade to next? And go back and watch At the Buzzer from yesterday. That VWAP was the target. We hit it. We traded into it. Of course, we ran through it. Gold has been trading some pretty crazy ranges lately. Today, we had a $130 range high to low when the daily ATR is 110. But we got there. And now here's where, you want to judge me as a trader. We'll talk about the short that I took last night, Coach Paul. I short armed this trade like anybody could short arm a trade. I got short from 40.23 last night with Dakota on slow markets. I took about $600 out of that trade. It was a way bigger trade than that. But hey, there's always going to be another opportunity. There's another opportunity coming up tomorrow. V-shaped recovery to the downside. Yeah, if we flip this chart over, right, this is buy the dip. Buy the dip in gold. But this is just continuing to sell here. Let's take a look at a shorter time frame chart. Take a look at the 30-minute in gold here. $600 is a great trade, Rich. I'm never going to complain about it. But this is one of those ones where we talk about, what did you measure for? And if you're not taking a decent percent out of what you measured for, then you got to question it. So I'm questioning it a little bit, but I'm okay questioning it with $600 more in my pocket than $600 less.
Well, remember, it should be measured before you enter.
100%.
Then accept it or don't trade it.
Yep. And yeah, 100%. Accept it, don't trade it. I probably I'm not going to lie, I trade with Dakota's great trading buddy, and he actually did the same thing where I got short, and he's like, oh, wait, Jay short now? What am I not seeing, right? Where you respect the trading the respect the opinion of your trading buddy, but at the end of the day, this is an example of you got to take your own trade. Grind your Ferrari. All right. Only if I had a Ferrari. Uh, but let's take a look, Coach Paul. Gold has been under this 200 moving average on the 30-minute for about 2 weeks now and continuing to trend lower, holding the 20 and 50 moving averages to the downside. Every pop has been sold to this point for the last 2 weeks or so. Have we figured out a bottom in this market or continue to make new lows?
Well, to me, for me to buy it, it's
Hmm.
got to close above the 200
Yep.
and a half hour. I'm going to favor the sell side until then. This has been a pretty steep more than a correct. This is a correction, technically. And like you said, it gets sold as soon as it can.
Hmm.
Now, if we take the Shanghai Open, let's frame that up. Why? Because that's where the volume really comes in.
Let's take a look here. Shanghai Open. Let's go down to a shorter time frame chart. Let's go to a 5 minute. That Shanghai Open 9 p.m. Eastern
Eastern.
time, 8 p.m. Central, and that's actually going to change when we have daylight savings here. It's actually going to move back, and it's going to be 8 p.m. Eastern time instead of 9. So that spike in volatility is going to be at a different time. And here you go, Coach Paul. If we consider this the open, that short looks like a great short when we reject price higher.
Now, I mean, now if we go to the half hour, keep that on there. Just go to the half hour. Okay. That's where volume comes in. That's where the opening. That's what to me openings mean a lot.
Yeah.
You had a nice trade. What'd you get out?
Uh, Great question. It's a great
By the
question.
way, for all the haters out there,
Yeah.
this is the game.
Mm-hmm.
And then we're looking back, but we can look back and measure and understand, okay, where do I need to improve? It's
Yep.
continuous improvement. So
So I'll say the reason I got out of this one, I don't know. I think I was kind of zoomed in on a profit target. I was zoomed in on the charts, and I probably should have zoomed out and looked at a higher time frame. Right, remembering that we did have that anchored VWAP. I had it on the charts. Remembering that we did have it there. Yeah, this is probably just one I should hold on. I was comfortable with the risk. I thought initially. Yeah, really no reason to take that off. Really no reason to take it off in hindsight. I will say I did take personal account, and I think I said it on air here. I haven't traded that account for a month, just because I feel like I haven't been. The reads are still there, right? You guys see it. We do the same thing day in and day out. So the markets are presenting opportunities, but my execution of those opportunities has been a little off. So I actually just got back to trading this account this week, and the focus has just been clicking the button when the markets say so. And I like the fact that I got into the trade, but not the fact that I didn't let it play out to even a percentage of what the ultimate target was. Even 4,000s, right? I'm short from 40.23. Let the trade play out to 4,000s and then reassess. Again, I took the trade off for a couple of points, which is fine, right? Again, I'm not going to complain about the money, but it's really not about the money in this case. It's about allowing the process to play out. And in this case, the process said that there was much more room down. Now, what I measured for was not 3,900s, right? What I measured for was 39.45, because that was that anchored VWAP from the breakout. So then if I look at how efficient that trade was, I took this trade off for probably $5 when the target was 80. That's what I'm assessing. Maybe I don't catch the full 80-point move with a full position, but I have to take at least 50% of that move out, right? If that's what I measured for, and accept the risk. So that's going in my journal, right? Good read. And I'm not going to, a lot of times I think what happens, Coach Paul, is I look at this and I'm like, oh man, if I held that position, If I held that position, I make 15 grand today. Uh, but I'm not going to harp on that number because it's not about the number, right? Whether that was a 3 micro trade, 3 mini trade, 30 mini trade, I have to let it play out. So yeah, maybe a little overthinking.
Well, you still had a good trade.
Yeah,
I know sometimes if we look back and go, "Oh, I should have held that longer," that can be very destructive over time because
yep,
then the next time it can lead to recklessness.
yeah,
Now, I'm now going back, going into a journal, marking it, and that's where the improvement comes. Because this wasn't a failure,
no,
by the way.
thanks.
Um, so improvement. Yeah, who was it that the quarterback you were talking about last year?
Uh,
The Washington
Daniels,
quarterback.
Jaden Daniels.
Became a big fan of his. I'll let you tell the story.
Yeah. So one of the things, and we use sports references all the time. But last year, I read an article that Jaden Daniels, quarterback of the Washington Commanders, does training in a VR headset. And Jen and John, we see your question. I got you. But he does training in a VR headset 2 times the speed of the real game, right? So then when it's time to make decisions in real time, there is no thinking and a lot less hesitation. Uh, and Dakota had somebody asked Dakota the question the other day. What's more important, back testing or forward testing? I think just continuing to put yourself in a position where you're assuming risk in the market is the best learning that you're going to get. Coach Paul, you see it with kids all the time. The great practice player, and then you put them out in a game and they freeze up, right? And the more you have confidence in what you're looking at, and you could be experienced, you could be doing this for 20 years, there could be something that is a hit to your confidence that you need to rebuild again, right? And confidence comes from evidence. If you continue to do something over a period of time, under stress, under pressure in the markets, then it's easier to continue to do that same thing, right? So, it's getting real reps in, real game reps where you have skin in the game. It's why practice accounts I think are great, but they can be too much of a crutch sometimes because we don't care, and it's too much of a crutch unless we can actually adapt the mindset that we trade with during trading with a practice account, right? If I could adapt the mindset of, hey, I don't care what happens to the result of any given trade, I probably trade my funded accounts, live account, personal account, whatever, trade it way better than overthinking it. And again, that just comes from reps.
Well, that's how you develop a process.
Yeah.
For everyone here, it's learning developing a process and understanding if it has an edge, because the edge shows up over time, not trade to trade.
hmm
Um, because it, otherwise you could fall to impulse trading, and that's just a recipe for broken accounts.
Yeah.
Um, but someone was asking about EMAs. Where was that?
That was Jen and John. We'll go back to that. Where was that question? How do you guys use the EMAs? Well, we're not using EMAs. These are SMAs that you see on the chart, simple moving averages. Coach Paul, I'm going to throw this to you. How do you use them? We'll start with the daily.
Well, first of all, there's the simple or the EMAs. EMA adds the latest data and gives it in its calculation, gives it more importance to the latest data. Simple just calculates the average. In my studies, I didn't find much difference, so I went with simple. You
hmm
can use an EMA, just be consistent. It's exponential moving average. Without getting deep into the math, Um, choose one. I use simple because it really didn't make that much of a difference. But to me, the 200 moving average, otherwise known as the white line, if it's above it, it's the trend is up. I'm looking to buy. If it, then there's the shorter ones, the 20 and the 50, the yellow and the purple. Now, these moving averages are used by large fund traders, um, trend traders, and they come into play often, as we've seen, especially the 200. They're not magical, they're an indication of the trend. Because we can see what happened when we got over the 200. If we can pull that chart back.
We'll go to the 30, or they're all still on the daily.
30 is fine.
And for Jen and John, right? Listen to what Coach Paul is saying here. He's not just using it as support or resistance. It's identifying the trend of the market. The moving averages that we're using are the 20, 50, and 200. Looking at these mostly on the daily and the 30-minute. But Coach Paul, do you just look at the 200 moving average or the 20 moving average and say that's a support or that's a resistance by itself?
No, it's relative. So in this case, we've had this incredible move. And we've been above the 200 on the daily since I had hair. It was a long time ago. But now, look at what these highs, we had this runaway, the space between the moving averages. They're very large. It's air pockets. So yesterday we were talking, we found support at the 20 after this huge move where we had a double, triple top. And in that, you should hold a 20 moving average. And it didn't. Yesterday closed below it. So relatively, most likely, we're going to have some liquidation by large funds.
Right.
We had that. And we'll probably continue to have that. That's how in a short, quick, that's the way I use them to judge the flow. You can use whatever moving averages that work for you. One of the things, though, it was really important is to understand when those moving averages are on top of each other, where they're tight, you have balanced market or a non-trending market. When they start separating, you have a trending market. And it's simple. That's the way I look at them.
There we go. Are you saying that the trend is based on the so here's the way I would look at this, right? Real simple. We have the 20 shortest moving average, medium term moving average, longest moving average. The trend is to the upside, right? On the daily. We can see that, right? But we're day trading, right? So we probably go to a shorter time frame, and in that case, we're using the 30-minute. Now, on this medium time frame, which is probably a little bit more clarity for day traders, what is this trend saying? The longest time frame moving average is at the top. 50, which is the medium time, is in the middle, and the yellow one, which is the 20, is lower. So what is the trend saying? That in this time frame, on these 30-minute charts, that in this time frame, we're moving to the downside. So, you know, when we looked at this yesterday, we said, hey, on the highest time frame that we were going to look at, which is the daily, we're starting to break some structure where we're no longer holding this 20-day moving average. And very specifically, the close below this 20 moving average, because Coach Paul, we hit it a couple of times, and we didn't start talking the same way we did yesterday. When we closed above, this is something different. This hasn't happened in 2 months, right? So now we're looking at, okay, on this medium time frame, which we're actually going to execute trades on, what is it saying? When we push up into this 50, there's an opportunity to take a short somewhere around there. Again, that trade I took was 40-23s right up here, rejection at that 50 moving average, which we haven't really been testing a bunch. So it's a way to read the trend. You still need a setup, I think, to take a trade, but it is definitely a way to read the trend. I don't know if we talked about that in a little bit. So good stuff, Coach Paul.
No,
We
yeah,
got
no, good questions.
one more market to talk about. Crude oil.
Well, go back to that. Yeah. Well, here's a great example.
Yep.
Look, this is crude, and crude is getting a bad name because it's not trending. Why isn't it trending? Look at those moving averages were almost the same a week ago.
Yep.
Why would that be? Well, because the price was in a range for a long time. They had no trend. And then when we close under the 200. By the way, this isn't magical. I learned this, but you ever hear of Paul Tudor Jones, one of the great futures traders of all time? He keeps it simple. He watches the 200 moving average. It's good enough for him.
Good enough for me.
So
Good enough for me.
in that here, now that we're trending, we're closing under, we had no trend. And by the way, this is a probability. One good thing about flat daily ranges is the risk is smaller. Look at the average true ranges going down.
$1.73.
Now, for longer term traders and big fund managers, they'll watch that because the risk on the downside is less and less because the volatility is less and less. But on a breakout, we saw that breakdown last week. Now, at that time, if you put that day, Coach, let's see what happened with the 200 on the half hour. Yeah. So we went up and touched it, played around, and then what did we do? We went sideways.
Yeah, so I'm gonna real quick. I'm going to we're gonna mark out this 200 daily moving average here. That's gonna be the white line on the charts, and we'll go back here. So this moving average we checked into on the daily yesterday. We rejected off of it, and from that point, what do we do? Volume just traded lower. So here you go. Keep going, Coach Paul.
So even for the 200, look at last night. First half an hour, tiny range. Now, as soon as
you didn't text me, Coach Paul. You didn't text me on this one.
I'm sorry.
Oh,
we
man.
had, what is that called?
What is this called here, chat? What do we call this? Who knows? Who's been paying attention? Who's been taking notes instead of pocket watching? Because we could define this all we want. If you can't take the trade, it doesn't matter. Urgency.
Urgency, Courtney.
Urgency. So what? And if you're a new viewer, what we're going to define this as, and if you're a new viewer, thank you for joining. One thing Coach Paul and I look at all the time is the first half an hour of the session open. The first half an hour of the session at night, right? So 6 p.m. Eastern time, 6 p.m. to 6:30. Why are we using a half an hour chart, you might ask? Because we want the market to establish a little bit more data. But if you anchor a VWAP to this, and that VWAP, look at how aggressive this angle of VWAP is. See how sharply it's leaving that range? This is what we call urgency. Not only is price leaving, but volume is aggressively leaving this market to the this range to the downside. Coach Paul, a lot of times, and I don't have the stats on it, maybe somebody does, but a lot of times when we see the market aggressively leave this range like this, that's the trend for the rest of the day.
So now, on the backdrop of failing at the 200 daily, and you had marked that with a white line up ahead. Now, last night we saw some urgency. I'll call it liquidation, those longs because of the Russia sanctions, whatever the news was. But we also had what head and shoulders. If we make that a line chart.
But yeah, we got a little
If
head
you
and
ever
shoulders
wonder
over
if
here.
it's head
Yep.
and shoulders, put a line chart. It's easier to see. There it is. Now we're on the right shoulder and we got urgency, liquidation. And it never closed above that. That VWAP, I don't think. So even in a dead market, there's some opportunities.
Yep. And
Now,
this one was right off the bat yesterday in crude oil.
yeah. Now remember, crude oil, gold, commodities are different than equities. Crude oil trades 24 hours, 7 days a week, all year long, forever. Gold is the same way, silver. Commodities, because there's openings in different regions of the world, but it's always trading. And that trade, even though crude was dead, that was a good trade. Or that had a lot of urgency and flow.
Flow was definitely to the downside here. So we got a good question here from Genius Monkey in the chat. Will you take the first 30 minutes of the market open for gold, or will you take the first 30 minutes of the Shanghai open? Please help. That is a great question. So the way that I like to look at gold is I'll look at that first half an hour. And if the first half an hour presents some urgency, I'll trade it there. If I don't get a VWAP outside of that range in the first in the next hour, then I'm going to wait for the Shanghai Open, right? So in this case, if we look at all of these, this is gold, right? We never got, VWAP never left the range. Price did, VWAP didn't leave the range, right? This is the day prior. Price left, VWAP didn't leave the range. I'm going to look at Shanghai at this point. If we get 3 hours of price, because now we got to think about what we're talking about here, right? This is 3 hours of price action with low volume, and the market hasn't decided anything. So this range doesn't mean anything to me because it didn't mean anything to anybody else, right? So why should I pay attention to it? Now, when we go here and that volume starts to pick up, what do we get? Some decent urgency to the downside. So if I don't get it right away, I'm not going to try to figure it out. I'm going to let the market say, hey, this is when we're going to trade some volume, and then I'll trade it from there. But that is a great question. A great question.
Right.
What about you, Coach Paul? Which one would you look at? Kind of the same thing?
Exactly what you just said.
Yep.
Why the Shanghai Open? Because it's got more volume.
Mm-hmm.
More volume is a better indicator. It's got more players.
Yep. Absolutely. We did it. We did it. Anything else you want to go over, Coach Paul? Did it again. Hopefully, the ideal of this session is to we all have our own processes that we're figuring it out or working through, executing in markets. I truly believe it doesn't really matter how much money I make or lose doing this. If it helps somebody else with their process, that's my goal here. That's why I'm here. I'm not here to say I'm the best trader. Tried to say that before. Didn't work. But ideally, what I'm doing here is maybe be a better trader than me. My trading mentor said that to me years ago. Take the information and make it your own. And that's ideally what I'm doing here. And again, if not, go watch somebody else. Coach Paul, anything you got before we go?
I'm going to repeat it. Plan your trade. Trade your plan. Learn yourself. Develop yourself as a trader. It takes a little more time than you really want, but if you're really serious about this, that's how you go forward. And we will talk again tomorrow. Oh, we lost your audio.
Oh, you should be able to hear me now. Big day tomorrow. Big day tomorrow. We have a Fed watch party tomorrow. Fed rate decision 2 p.m. Eastern time, 1 p.m. Central time. Make sure you join. We are going to be talking about it during the opening call all day, wall to wall coverage. Having a Fed watch party tomorrow, and then got our earnings watch party. Oh, Microsoft. Who else is reporting tomorrow? It's Microsoft, Meta, and is it Amazon? Microsoft, Meta, and Google reporting earnings tomorrow. So we're going to have some special guests joining us for At the Buzzer to talk about all those big tech earnings. If you're wondering why we focus on, they're so heavily weighted in the equity markets that we trade that as those companies go, the markets are going to go as well. So we want to how those companies report their earnings tomorrow. So big day tomorrow. Again, keep your accounts active so you can take advantage of the volatility. Right. The last thing you want to do is blow an account and then get back into a combine or a practice account and take the best trade of your life. Right. So be patient, execute a process, and trust your process. Trust your process. And I hear you guys. I got a noise gate on my microphone, so we'll take that off for the next time. Don't do anything crazy tomorrow. Trade well, manage your risk, and we will see you all then. Have a good night.
Bye.